Since the start of 2022, the NASDAQ is down 33%, S&P 500 down 23%, and many stocks that ran hot throughout 2021 have lost half, 3/4, 80%, or even 90% of their peak value. My name is Isaac Cryer, and I'm here to help you to navigate through this volatile stock market and uncertain economy. And by using the same value investing strategy that Warren Buffett uses, we're going to stay level-headed and we are going to be successful and profitable long-term investors. So let's get started. Everything that's been happening recently really reminds me of a quote from Benjamin Graham, the author of The Intelligent Investor. He said that in the short run, the market is a voting machine, but in the long run, it is a weighing machine. With the recent rise in interest rates contributing to the constricting of the money supply, the speculation has stopped and the market has now switched from voting machine mode to weighing machine mode. Another way to look at this would be to say that the market has switched from optimistic to pessimistic. And your job as an intelligent investor is to be a realist who sells to optimists and buys from pessimists. Now this year, whether you've been invested in stocks, bonds, or crypto, you've probably seen some losses. But for the long-term investor, losses and lower prices are just part of the process, and they're actually a good thing. This is because as stock prices fall, you get to buy more equity in the company per dollar invested. And also, the company gets to pass on more capital to you as an owner. And here's what I mean by this. Let's say you have a company trading at $100 per share that's yielding 4% as a dividend. So paying you about $4 a year. Now let's say that company, the stock price falls from 100 to 50. But they're still paying you that same $4 every year. But instead, now that the stock's at 50, that's an 8% dividend yield. So they're going to be able to pass on more capital to you as an owner. Same thing on share buybacks, if that's what the company chooses to do. Here's another quote from Benjamin Graham, and it's absolutely true. Stocks become less risky as they fall. This is because the payback time is shorter. Now, the payback time is how long that the company would take to return your initial investment. So, for that 4% dividend example I gave earlier, assuming you reinvested all the dividends, it would take that company 18 years to return your original investment of $100. Whereas, if the stock fell to 50 and you bought it then, at an 8% dividend yield, it would only take them 9 years. Again, assuming you reinvested the dividend. So in a perfect world, you could just wait for the value of stocks to fall, and then when they've hit their very bottom, just inject all the cash you have readily available into the market then. But in reality, that type of timing is next to impossible. So what I personally do is known as dollar cost averaging. So whenever a stock reaches a certain price that I'm comfortable with owning it at, I'll sell a put contract to enter into owning that company. And then if it continues to go down, I may roll my contract, which I'll probably make another video on that later. And I'll continue to buy more and more shares through more put contracts and through just buying shares off the open market. So as long as you own a lot of different stocks across different industries, I think continuing to bring down your average cost through just buying more in market downturns is the best strategy. And of course, you could buy puts to hedge, and another option is you could buy really long-term call options on stocks like Google or Amazon if you really think the market's going to recover. One more thing I want to talk about is how the math is on your side. When stocks fall 35%, if you buy then and then they recover back to the all-time high, you don't make 35%, you make 53.8%. So therefore, in my opinion, the reward outweighs the risk. Well, I think that about wraps it up, and I hope you enjoyed the video. So thank you for watching if you made it this far, and please leave a comment about what video I should make next.